Hey, what's going on, everybody? Jesse here, and I am on my way to Joe's Terril & Company to shoot April's video. It's been a while since we've done a video, and it's about time we delivered another one for you guys. So, I don't really know what Joe's going to be talking about today. I never really do, but as usual, I'm sure it'll be good content, and hopefully we'll get this published out tonight. The turnaround's usually pretty quick, and this will be up on YouTube and his site for everyone to check out tomorrow. It is a gorgeous day here in the St. Louis region. All right, here we go, left-hand turn. And almost there. All right, so let's get out of the car and get in the building and see if we can't get Joe to sit down and talk to us today. Talk to you soon.
Okay, this is what you looking for. One bracket, get it done.
Like the custodian. Or
Yeah. And then that way, so I don't know if you.
Yeah.
And then so this is.
All right, everybody, it's about 6:15 and the office has cleared out. As you can tell, we're not so busy as we were. And here's Joe. And Joe's gonna tell us what we need to know for today. Joe, take it.
Thank you, Jesse. Today is April 16th, 2012. My name is Joe Terril. I'm president of Terril & Company, independent wealth management firm located in St. Louis, Missouri, with about $520 million of totally discretionary money under management. And we are going to discuss several things in our efforts to keep our clients and our friends updated on our thoughts on the economy, investment markets, etc. So, taxes are due tomorrow, and maybe we'll chat just briefly about that and maybe what that effects have. But today being April 16th, taxes are due by midnight tomorrow. I assume, Jesse, you have your taxes all filed and paid, and you're not a last-minute person?
Oh, have mercy, it's the end of the world.
You mean to tell me you've got them prepared but not paid for yet?
They're dealt with, and it breaks my heart.
Well, there you go. You're one of those rich fat cats that's not paying your fair share. No wonder they're taxing me more. Guys like you aren't paying your fair share. You're a rich fat cat.
Somebody thinks I am.
Well, with that aside, we will move on and let's talk about the first issue that I want to bring up, which is this idea of risk. And I say this because I continually hear comments by people about the economy around the world, our investment markets, etc., and they refer to risk as if it's a gigantic negative. That, well, there's a risk that what's going on in China is going to wreak havoc with the world economy. Basically, what China is attempting to do is to move from a mass producer of basic goods into being more of a producer of high technology, higher quality goods, and as they transform, you know, everyone is worried about, the risk from China. I constantly hear them talk about the risk in Europe that Spain and Italy and Greece, Portugal, that there's a risk that they're all going to default and wreak havoc. That they talk about the risk that are in the United States stock market if the economy collapses around the world and gasoline goes to $10 a gallon, what would happen to stock prices and risk. So, with that said, I just want to remind our viewers that risk is a good thing from the very basic part of if a bunch of people wouldn't have jumped on the Mayflower and risked crossing the Atlantic Ocean to get over here, we wouldn't be doing this podcast. 30 years ago, if I wouldn't have taken a risk and quit my job, took the money that I saved and start this business, there'd be 7 or 8 people in here, including myself, that would be unemployed. Risk is a good thing. The secret to it in investments is measuring the risk against what the potential reward can be. So things in the economy of banks, as an example. It's a bank's job to take risk. It's a bank's job to assess somebody's ability to repay the loan, what interest rate they can afford to pay the bank for the use of someone else's capital that the bank's acting as a middleman on. And if the bank is good at assessing this risk, and the people who want to borrow the money are good at assessing their risk of borrowing money, it's good for everyone. And I'm a little concerned in monitoring government rules and regulations recently seem to be tried and built around, is there some way we can take all the risk out of the world? Is there some way that we can regulate the banks and the financial system to the point where there is no risk of any kind? That, if they try and accomplish, is a huge mistake that'll hurt the economy. And I just want to remind our viewers, as I stated a few minutes ago, that thank goodness for risk. Thank goodness that some of the companies that we have part of our clients' $520 million invested in are willing to take the risk to expand overseas. They're willing to take the risk to try and develop new products. This is what creates economic activity. And I look for risk for our clients. That's the job. And some notion that people have that somehow we can control our economies so there's no risk that we would have any type of recession, but there's also no risk we're going to have growth. There's going to be no risk in investments. We don't want the banks to have risk. This is craziness. And we will monitor that to make sure that this is just a short-term phenomenon, and this isn't something that is going to become an issue, because if we do as a society try and take all the risk out of everything, we'll have a horrible economy and a horrible investment market. The world economy is growing at a very acceptable pace. Maybe a slight slowdown since the end of the year, but not enough that we are concerned that there's a major problem. China recently reported 8.1% growth in their economy. Yes, sometimes China reports 12-14% growth, but China's also reported 7% growth. For what China's trying to do, 8.1% should reassure people that China's continuing to grow at a nice pace. The number of people moving into a middle-class lifestyle in China continues to demand many goods and services, technology products, and things that the United States sells, and this is a positive for the world economy. The economy in the United States is growing, subject to how you want to measure it, and etc., somewhere around the 2.5% to 3% level. this is okay, could be better, there could be more people working, but the economy in the United States is all right. The disaster that was supposed to befall Europe has not occurred. This is dominated by Germany, and their economy is extremely strong, and it's keeping the overall average up. But I just want to state, leaving the human element out of the equation for the moment, that growth in China and what is going on there is much more important than what is going on in the economy of Spain, Italy, and Greece. Yes, they're world community members, but for the overall world economy, much, much more important that 8.1% growth in China than it is if we put all three of those countries together and wonder what effect that will have. So we see this good continued growth in world economies, mainly paced by plenty of liquidity being supplied by central banks around the world. We also believe that that will continue to translate into reasonable gains in investment prices. The last time we did one of the video casts, we mentioned that we thought we would see investment gains, and certainly January, February, March had very good gains in investments. April slowed down a little bit. We think we'll continue to see gains between now and the end of the year. Maybe there's another 4 or 5% that we would expect in principal gains. So we continue to be constructive. We're not wildly bullish, but on the other hand, we just do not see an asset class around the world for the world's capital to run, invest in. For the moment, the most reasonably priced, highest quality asset class that investors around the world can choose is U.S. stocks. And they're continuing to do that, and I think will continue to do it right through the end of the year. We always like to mention, what are we worried about? We always worry about the price of oil and energy, and certainly now I want to begin with these podcasts and written comments and things like that that we do to begin to start to mention the accumulated budget deficit we have in the United States. It's an issue, and if there's no action taken on this in the next 12 to 18 months, we're going to become very bearish here at Terril and Company, and we will be looking to sell investment assets. But we've got a little time on that, and I stress little time, to see if, as a country, we're going to take any meaningful action and actually stop trying to borrow and spend our way into prosperity. It won't work. It'll only down the road create a horrible economy and bad investment markets. But that's down the road. So those two things are our concerns, and we're monitoring closely. Price of energy, the potential that as a country we'll stick our head in the sand, refuse to do something about our massive budget deficits. So we appreciate you joining us today, and we'll be updating perhaps in another 30 days. Certainly if there's any activity of any type that requires immediate conversation, we'll try and post a update and a video update on that. So thank you very much for joining us. The rest of you rich fat cats, be sure and get out there and pay your fair share now and get your taxes paid by tomorrow. And until we talk again, thank you. I'm Joe Terril, president of Terril and Company, independent wealth managers in St. Louis, Missouri.
He talked too fast and everybody else said,
1, 0, 1, 2, 3.
okay.
Absolutely.
So all that.
Yes.
Innovation, cultivation,
Hey everybody, how's it going? Jesse here. Just a quick update as I am on my way home after wrapping up the new video for Terril and Company with Joe Terril. Joe Terril had a lot of cool and interesting things to say about the economy and investment markets today. So I hope you enjoyed the new video. I had a good time making it, and you know, I'm on my way home now to get this footage edited and uploaded to YouTube so that we can get it out to his website so everybody can check that out tomorrow. Not to be one to let the cat out of the bag. Those of you out there who have smart devices have something cool to look forward to coming out of Terril and Company in the next couple of weeks. And that's all I'm going to say about that. You know, hopefully you're as excited as I am about it. So, you know, thanks for watching, and I will talk to everybody again when we shoot the next video. Have a good one.